Netflix up 80% in 2024. What will it be in 2025? The stock that is the number one stock that never was meant to be at one stage. It could have been out the door. It could have been at bankruptcy. You could have forgotten about Netflix and it never ever existed. Yes, Netflix at one stage, if you didn't know, was the CEO went to Blockbuster CEO and said, "Hey, can you buy this company for X amount of dollars?" And the Blockbuster guy just laughed at him. Yes. Well, who's laughing now? Netflix is up sky and high and absolutely going up to $1,000 a share. They're flying high, Netflix. And Blockbuster is now bankrupt and out the door. What a mistake, or probably the greatest not merger there was, because if that did happen, Netflix wouldn't be where we are today, and that is a guarantee. It would be swept up with Blockbuster and gone burger. So, who's having the laugh now? As Netflix was a rent online retailer at the time with DVDs and movies. Now look at them now, the conglomerate they are in the streaming space. Yes, Netflix is the number one streaming site in the world right here, right now, and nobody is anywhere in cooee of them. Disney, HBO Max, Apple, they're all Amazon, they're all trying their best, but they are nowhere near where Netflix are at the moment. And that's why they continue to be the top of the tree into the stratosphere. And with hit shows like Squid Games 2 just coming out, they'll just continue to fly all the way to the moon. Yes, folks, all the way to the moon. Netflix has been an outstanding company, gets most of the top talent outside of Marvel Universe. But to be honest, there is no competing. When it comes to streaming, Netflix is number one. But is the stock overvalued? Is the stock a time to buy? Is this a stock to hold on to? Is this a stock to get rid of? You're going to find out right now. We're going to do a stock analysis for you. We're also going to look at the intrinsic value of Netflix, what's happening there. If you stay right to the end, you'll get that. So just remember to like and subscribe to Barry Charles to get all your financial news right here on the channel. Yeah, so what do I see with Netflix? They have obviously doing great as well with any of our Christmas games that are absolutely smashing records. So that's more profitability for Netflix. So they really are dialing it up. Will they continue into the future? Well, we will see. But yes, we're going to have a look at the financials right here, right now of Netflix. We're going to start off with, well, the current share price of around $880. So that's not too bad. And you look at the 52-week range, you could have got it at 547 or 477. Congratulations to you if you did. And up to 941, so it's gone down from there. But still a very good year of 80% return. Congratulations if you were in that stock, considering what a conglomerate it already is. So, the current earnings per share is 19.8, the P ratio of 44. No dividend currently, sadly, but that might be on the horizon in the next few years, and that's what people are probably waiting for. Return on invested capital are currently at 18%. That's pretty good for a company this big, so congratulations on them. So every dollar you spend, you get 18 cents. So well done. An extra 18 cents on top. Free cash flow is around 7 million, up a little bit from 2023, but way up on 22 numbers of 1.6 billion. So they are doing quite well, and I expect that to go higher and higher into the future. But the big budget movies are what's probably letting them down. Last year, they really, if they can somehow cut that, and how do you cut it? It's hard. You just have to keep going for new talent. That's the problem. When you spend the big money, you don't get as much return. Yeah, so interesting to see how they go. Shares outstanding down to 427 million from 450 million a year ago. Very impressive. This is why the stock is going well. They are doing everything right for the shareholder. That's very, very impressive. We'll see if they can continue to do that. Let's have a look at the revenue side of things here. 37 billion, up from 33 billion last year. From The net income is also up 7.7 billion from 5.4 billion last year. Impressive numbers, very impressive. You look at over a quarterly basis of revenues up 9.8 billion from 9.5 billion the quarter before, and the net income is 2.5 million from 2.1 billion. Sorry, so they are doing very good things. Continue to go up, nicer. Consistency, not out of this world's numbers, but very consistently for a big company. It's very, very good. So good return on invested capital. Shares outstanding is going up. The free cash flow is slowly going up. There's not much bad things to say about Netflix in terms of it's not a company that's going to go bankrupt anytime soon. Sorry, the total assets of this company is I think of stuff. Total assets is 49 billion. And the total liabilities is 29 billion. So that's with the line in the sand there. So that's pretty good as well. I just left that out of the calculations for you folks. Well, now we're going to have a look at intrinsic value for Netflix. What is the intrinsic value of Netflix right now? Are you getting a steal deal? Are you getting an average deal? Are you getting an overvalued deal? Is it time to ship off, take your profits and go somewhere else? Or should we be buy? Not financial advice. But anyway, this intrinsic value, I'm going to take a bear case for you, base case, optimal case, extraordinary case, and absolutely out of this world case, and to the moon, just to give you an idea of the intrinsic value. So how are we going to do the intrinsic value? We're going to use the current share price with the earnings per share, expected growth rate, the bond yield, and it gives you the intrinsic value. Let's have a look. So we're going to look at a bear case at $880 at time of recording, at 19.8 earnings per share, at a 10% growth rate with the current bond yield. You're looking at $588. So yeah, not too bad. So now if we pop that up a little bit to 15%, for a base case, you're looking at $794. So you're getting near fair value, not quite. You're still overvalued, but that's where we're at the moment. Now, why I say it's priced right now. Why am I saying that? Netflix has always been above the factor. Most of the time. Sometimes you get it at the right price, at a great price, but most of the time Netflix is above where it's valued most of the time, compared to like a Facebook that's always undervalued all the time. So that's the difference between companies. Same with Apple, normally above where they should be. So that's why you got to calculate this sort of stuff until Netflix is always 10% above where it should be generally. So that's why you got the price where it is. Companies know that they're a good company, reliable, they'll stick to it. Now, if the earnings per share goes up to 25, we'll keep it a 15% expected growth rate. Now you're looking at $1,000. So you would be looking, yes, this company. If you think it's going to get to 25 earnings per share and expect growth rate of 15%, you'll start buying. But if you think it can go to 32 earnings per share at 20% growth rate, you're looking at over $1,600 fix. And if they can fly it to 39% and 25%, then you double that to 2,300. Yes, so that's where Netflix is at the moment, folks. What do I think about it? That's a good stock. It's not going to be a world beater, but if you want a stock that's consistent like the market, Netflix is a stock for you. If you want a stock that's going to probably beat the market consistently, may not smash the market, but will probably consistently beat the market, with a safe return more than likely, Netflix is a stock. But Netflix could eventually go to zero if people start not doing streaming. That's what I have to let everyone know. Streaming, it's there right now, but will it always be there? That is the question mark. People say, yes, I watch TV. But will they stream from there? There could be new technologies that come out that take streaming away. If that happens, that's where the danger is in buying Netflix. That's the only concern I have for Netflix is, will streaming be popular going forward? That's what you got to decide before investing into any stock. But anyway, that is the stock analysis and intrinsic value of Netflix. I hope you enjoyed the video. Remember to like and subscribe, and I'll be back with many more videos like this just for you.